Hello, everyone. So, I want to talk to you about something super important today. So, if you are watching and you have some business besties, some fellow childcare CEOs that you think would benefit from this message, go ahead and tag them, share the link with them, let them know because some of the things that I'm about to tell you are going to come as a big surprise to many of you. I want to share with you today three things that you may not know about the Employee Retention Tax Credit, or ERC, and how it could affect your childcare business this tax season. The first thing you should be aware of, if you have not received ERC yet and you are entitled to ERC, you have until April 15th, 2024 to get your credit for tax year 2020. You have until April 15th, 2025 to claim the ERC credit for the tax year in 2021. Now, with the employee retention tax credit, there were a lot of changes that happened, and the changes happened very drastically. So, you may not have qualified to receive the credit initially, but maybe you qualified to receive it subsequently after the rules have changed. So, you'll want to speak with your payroll service provider or your accountant to see if you qualify. Some things that some people do not realize or understand about the employee retention tax credit is number one, owners are not allowed to use their wages as qualifying wages for the employee retention tax credit. You are also not allowed to use the wages of your family members. All of the other wages from all of your other W 2 employees could potentially be counted. Factors such as people receiving payment for being sick and being paid during COVID, and any income that you may have received or loan proceeds later turned into forgiven income for payroll protection program PPP, that is going to reduce the amount of ERC that you are eligible for. Okay, so if you did not receive the employee retention tax credit for 2020, you still have time. You have until April 15th, 2024 to receive those credits. So tag a friend. If you didn't get it for 2021 and you qualify, you have until April 15th, 2021 to receive the employee retention tax credit. So that's the first thing that I wanted to make you aware of. If you did not receive it, you still possibly could receive it if you were eligible for it, okay? But there are some factors that could reduce it, such as your wages if you're a business owner that is on payroll and his or her company, and it could also be further reduced by PPP proceeds. And if you do receive ERC in error, please know that I have seen come across my desk at least 6 audit letters for the employee retention tax credit. So I suggest that people have this credit done by their payroll provider. I also suggest if you're in the midst of getting an employee retention tax credit, it's probably a good idea to stay with your payroll provider until it is all said and done. Our firm does partnership with payroll specialists that are preparing the employee retention tax credit if you still need it, but it is usually best that you have it done by the payroll company that processes your payroll. If your person doing ERC has not asked for profit and loss information or for revenue to be able to determine if you qualify, that might be a red flag. If your person hasn't asked about you having been shut down or your capacity being reduced and therefore reducing the amount of revenue that you were able to earn during the pandemic, that may be another red flag. Remember, the rules for 2020 ERC are different than the rules for 2021 ERC. And you have until 2024 to get it for 2020 and 2025 to get it for 2021. Which brings me to my second point. Many people are surprised to learn that they owe taxes this year. And when I say this year, I'm referring to this year that we're filing 2022. And they're blaming it on ERC. They're under the impression that ERC is taxable income. ERC is not taxable income, but ERC is causing a lot of people to owe money in taxes. And I'm going to explain why. If you paid $100,000 for payroll and then the government gave you back $50,000 of that 100, how much did you really pay? Well, 100 minus 500, well, 100,000 minus 500,000, of course, is 500,000. So that means when you originally filed your tax return, that payroll that you paid was included as an expense, and that's correct. But now, if you receive a refund for the money that you paid, guess what? You didn't pay as much as you did. That means your profit is going to increase. And when your profit increases, this means that your tax is also going to increase. So ERC in and of itself is not taxable, but it does lower your expenses, which makes your profit increase. And we know when our profit increase, our tax increases. And if you are having concerns about your tax liability, we do offer advanced tax planning strategies, and you're more than welcome to schedule a call with us to explore those opportunities that may be available to you. I want to talk to you about number three, since we're on the subject of tax. And point number three is that you must amend your tax return. If you receive the employee retention tax credit, if you're receiving it today, or if you've received it in year 2022, that credit was not for 2022. And what that means is because you received employee retention tax credit money for a year after that year has closed, you now need to amend the year for which that ERC was given to you. Am I making sense? Yes? Let me know in the comments. And if you're catching this on the replay, give me a hashtag replay so I know you've seen it. And I'll explain to you what I mean by that. If they give you the employee retention tax credit and you didn't get it until 2022, or maybe you're not getting it until 2023, that credit is not for 2022 or 2023. That employee retention tax credit, and you can tell on the check and on the paperwork that they give you, that credit is actually for a prior year. It either was for 2020 or 2021 because the employee retention tax credit was no longer available after September. You can still get it late, but they're not paying out for any periods beyond that because that's when it ended. So what this means is if you've received employee retention tax credit and you got it after the year it was for, you need to amend your business tax return. Now, if your business files a separate return from you as an individual, meaning if your business is a corporation, if your business is a partnership, if your business is an S corporation, you're going to need to amend that business return. If you are a sole proprietor or a single member LLC and you file your business return with your personal return on the Schedule C, then you would just need to amend your personal return. Okay, is that making sense? So, if you are a partnership or an S corp and you had to amend that business return because you got ERC, you also have to amend your personal return. Because once you get the ERC, that means your K1 is going to change when your business return is amended. And that K1, of course, gets filed with your personal return and flows through to your personal balance of whether you owe money or whether you got a refund. Now, here's the kicker. Maybe you got a refund for 2020 or 2021, and then you got this ERC. Well, that means that your refund was too big and you're going to have to give money back. Or maybe you owed money in 2020 or 2021 and you've already paid. Or maybe you're on a payment plan. That means that you are now going to owe more money because, as I told you a little while ago, and the employee retention tax credit reduces your expenses. So if you have less expenses, that means you have more profit. And if you have more profit, that means you have more taxes. So thank you to the person who wrote in and asked if I could explain the employee retention tax credit. I hope that this clarifies things for you. If you did receive ERC and you did not amend your tax returns yet, you want to get that done as quickly as possible. I shared with you all a few months ago, the IRS has hired 87,000 compliance officers. That means their entire job is to make sure that the United States public, all of the taxpayers, are paying what they're supposed to pay in tax. And if they're not paying what they're supposed to, or if their returns are erroneous, or if things are omitted, they are going to come to you for that money. Now, the good thing that could happen for some people is while you're amending that employee retention tax credit, so your payroll tax returns get amended, then your business return gets amended. Now, if while we're amending your tax return to include the employee retention tax credit so that you can eventually pay any tax that you'll owe as a result of it, the thing that's going to happen is we're going to look at your tax return. We may find that you missed out on some deductions and credits. If we do, at that time, we'll also be able to put those deductions and credits that you may have missed. Maybe your childcare, maybe your accountant didn't specialize in childcare, so they didn't realize there were some things that you could have gotten and it was left on the table. Well, if we discover that while we're amending your tax return, we are going to make sure that you get those deductions and credits that you are rightfully entitled to. So, yes, if you got ERC, you are probably going to owe taxes if your return is done and then you get it later. But how much taxes you owe, that's a matter of have you exhausted all remedies and opportunities available to? And that's where we come in. And I'm Shanita Jones. I'm actually the founder of Jones Taxes and Financial Services, where we are the accountants they care. And we help childcare owners build scalable, sellable businesses through the proactive use of accounting and tax strategies. And knowing what to do and how to handle your employee retention tax credit, that is one of the strategies that we actually are pretty good at helping people with. So if you have any questions about anything that I said to you, if you know that you need to amend your tax return, or maybe you haven't even filed it yet, feel free to reach out. Thank you for watching. Do tag your friends, share this with them, let them know this information so that they aren't caught by surprise if they receive a notice from the IRS that they need to pay money or they need to do an amendment or something is incorrect. Because what I'm finding is that some of the companies doing this employee retention tax credit, they're telling people that they'll need to do an amendment to include the income, but they're not explaining it's not just the interest, it's actually the difference between what your profit was originally and what your profit is as a result of the employee retention tax credit. With all of the COVID changes and COVID programs, that brought a lot more complexity to a lot of people's tax situations. So you may have been a person in the past that was able to manage and handle all of these things on your own. But right now, with everything going on, you may be finding out that you no longer are able to keep abreast of everything you need to do in your childcare business, everything you need to do in your personal life, and everything that's constantly changing with these tax law changes. And that's why we study the tax code so that you don't have to. So, as I said before, feel free to drop me a message, tag, share this with your friends, and I will be back with more information for you real soon about our MLK Day Financial Freedom Day. Talk soon. Bye bye.